Let's go through quarterly results for Suzlon Energy and see what the numbers mean. So if we check the sales, this quarter sales were 3,132 crore, down from 3,790 crore in March 2025, but up 55% compared to June 2024, which is at 2,022 crore. So which means sales are much stronger than last year, but have slowed down from the big spike in the previous quarter. And if we see the expenses, total expenses were 2,533 crore, lower than March 3,096 crore. And raw material cost is 61% of sales, slightly better than last quarter's 65%. And employee cost is 8%, stable compared to before. So Suzlon is managing cost fairly well. Margins are holding up. If you see the EBITDA, operating profit, which is at 599 crore compared to 693 crore in March and 370 crore in June 2024. And operating margin is 19%, an improvement from 18% last year and last quarter. So core business is profitable and running efficiently. And if you see the other income, it's only 33 crore, not very high. Last quarter, March 2025, it was 35 crore. So basically the same. No big extra gains. So profits are mostly from the core wind business. So if we see the finance cost and depreciation, interest cost is at 103 crore, higher than last year 45 crore and March 85 crore. And depreciation is at 70 crore, in line with previous trend. So borrowing costs are rising, which is something to monitor. And if you see the profit before tax, the current quarter is at 459 crore, lower than March 551 crore, but higher than June 2024, which is at 302 crore. Profits are better than last year, slightly down from last quarter. So if you see the tax, effective tax rate shows 29% this quarter. In March 2025, there was an unusual minus 114% tax, which boosted net profit artificially. That's why last quarter looked extraordinarily high. If we see the net profit, current quarter returns 324 crore compared to 1,181 crore in March and 302 crore in June 2024. The drop from March is because of the unusual negative tax benefit then. Without that, this quarter looks steady and normal. So by seeing these numbers, core business is performing strongly. Higher sales than last year, good margins, and steady profits. The fall in net profit compared to March is not from weak business, but because last quarter had a huge tax adjustment. Rising interest costs are a concern, but margins at 19% are healthy. In short-term view, Suzlon's result may continue to swing depending on project completion timelines, but the underlying business is stable. But in the long-term view, with renewable energy demand rising, Suzlon is well placed. If it can manage debt cost and keep margins near 18 to 20%, profits can grow steadily. But there are some risks we need to consider. So the company is currently having higher borrowing cost and delay in execution of wind projects and fluctuations in raw material cost. So what do you think? Can Suzlon maintain steady growth in its wind energy business while keeping debt cost under control? Let me know in the comments.